Hi everyone, welcome to my YouTube channel. This is Bola Halabi. Today I would like to talk about stocks and bonds. If you are planning to invest some money, you may want to consider whether to invest in stocks or bonds. So I believe knowing the differences between the two will help you to make informed decisions. And that's why I'm creating today's episode to look at these two asset classes. When we think or talk about stocks and bond, I want you to know that both are good form of investments and they each have their pros and cons. I'll be going over the pros and cons in this video so that you can make a good decision if you are considering investing in either choice. Before we go into the pros and cons, I'll quickly go over the definitions so that it will be clear to some people that may not know the differences between stocks and bonds. So, what is a bond? A bond is a fixed income debt instrument which is merely a loan made out to borrowers, typically corporations or government agencies. So when you invest in bond, you are loaning out your money either to corporation or government agencies. It can be the local government, state government, or even the federal government. So that's bond. It's a loan that you made out to a corporation, to a borrower. Stocks, on the other hand, represent an ownership stake in a publicly traded company. So if you buy the stock of Microsoft, Apple, Tesla, you have become a part owner in those businesses. So that's stocks. So now let's go into the advantages of bonds. Bond, I want you to know, is mainly for people that are risk averse because it provides stability of principal. So let's say you put about $5,000 in bond. You can be sure that you will not lose that money, so your principal is stable. Bond also generates steady income stream. So let's say your interest on your bond is 10%. It's not gonna change, so you know what you are getting from bond, so it's not changing. So that's another advantage. And the third one is that it is less risky. And again, it goes back to the fact that you are not gonna lose your principal. So bond is pretty stable if you want to consider investing your money in it. Now let's go over the disadvantages of owning bonds. The major one with bond is that it provides lower returns. So the return that you get over time on bond it's pretty low when you compare it with what you can potentially get if you invest your money in stocks. Now let's go to stocks. The first one is, let's talk about the advantages of owning stocks. Stock is good for people that can tolerate some level of risk because over time stocks tend to produce higher returns than bonds. Stocks can give you 20%, 30%, even sometimes 100% return on your investment. So that's the super good advantage of owning stock. And if a company that you invest your money in continues to do well, you are gonna continue to make more money. Next, let's talk about the disadvantages of owning stocks. Of course, the first one is that it is riskier. If you look at it, let's say you invest your money in a company that went bankrupt. Do you know what that means? You are gonna lose all your money. So that's a risk. So before you put your money in any company, you should do your due diligence. You should make sure that the company will continue to exist for a long time. But I know this is difficult. Enron was a popular company. The company was doing very well. Investors were piling money into Enron stocks, but all of a sudden, Enron went bankrupt. And guess what? All investors, they lost their money in the process. It's not only Enron these days. Toys R Us, Sears, many companies are going bankrupt. So you should know that if you are investing in stocks, you are taking a big risk. There's a better way if you invest in mutual funds. Mutual funds is a basket of stocks. It may contain up to 500 different stocks from different companies. So if you buy into mutual funds, at least if one or two companies in the basket or in the fund went bankrupt, you can still be sure that some other companies will be doing fantastically well. The other disadvantage that I'll quickly mention is that there is no guaranteed return. With bond, you have stable, steady flow of income. If you are getting 10%, that's what you'll be getting. But with stocks, there is no guaranteed return, so you should know that. So the question now becomes, which one is better? Which one should you put your money in? And my answer is gonna be, it depends. It depends on your stage in life and the level of risk you can take. It is generally recommended to have a mix of both. When you are just starting out, you may have a smaller portion of bond in your investment portfolio, say about 5% when you are 30 years or less of age. But as you continue to grow and advance in age, you should consider increasing the proportion of bond in your investment portfolio. Let me give you an example. Let's say you are 65 years old. If you are invested 100% in the stock market, you know that stock market can crash anytime. If any crash should happen when you are at age 65, it's going to impact your retirement because you can potentially lose all your money, and we don't want that. But at 65, let's say if you have 30% of your money in the stock market and 70% invested in bond, you are putting yourself in a better position because at 65 you need that stability, especially if the money you invested is what you are going to depend on for your retirement. So the answer is you should have a mix of both, and the proportion will depend on your stage in life. And that's where I'm going to end it today. Now you know the differences between stocks and bonds. If you are planning to invest, you know which one will work for you based on your stage in life. Thanks for watching. Don't forget to hit the subscribe button so that you will know whenever any new video comes out. And feel free to share with your friends and families. Till next time again, this is Bola Halabi. Keep winning, my friends. Keep winning.